Yes, I think actually that we can start our webinar.
Yes.
So, hello everyone and welcome to this webinar. My name is Olena Grinyuk and I'm responsible for the Central and Eastern Europe at SME Banking Club. And I will be hosting this webinar today. And I'm glad to be joined by Christian Rumer, co-founder and director at Q-Lana, and Svetlana Zikic, Q-Lana's representatives in Europe. And Q-Lana is a tech company from the US having a knowledge-based lending platform for SMEs. And thank you both for joining me today.
Hello, and thank you.
Hello. Good morning.
Okay, the topic of our today's webinar is the digitalization of SME lending and human part of it. And before we start, let me mention some organizational moments. So our webinar is scheduled for 30 minutes. And we are recording, just checking, yes, we are recording this webinar. So after we finish, you will receive the link to the video and the presentations. In the end of the webinar, we will have some time for questions. So please prepare yours, and also you can type even during the presentation, and we will be ready to answer them in the end. So please type your questions into the chat. And I think that this is where we can actually start. So let's go to the topic. I will give a very short overview on what is going on in the CE, Central Eastern Europe region, in terms of digitalization for SME customers. So main part of the banks here has digitalization of lending processes for SMEs in a full scope or partial in the digital strategies for that segment. At the moment, 8 banks in the region, and among them 5 in Poland, 2 in Romania, and 1 in Bulgaria. These are the data of our research that we did last year. So these are the banks that offer to SME customers a possibility to apply online for a loan or any other financial products like factoring, finance, online, and 2 banks. Yes, actually in Poland, which are ING Bank and M Bank, offers fully digital customer journey. So from the application till the disbursement and for the further loan administration of the loan. So actually, if the customer doesn't want to go to the branch or to meet their relationship manager live, so he actually can apply online, receive the decision, sign the loan agreement via the online banking application, and also to upload further needed documents, for lending, for loan covenants, etc., via the online banking. So there is no need for them to visit the bank physically. If we if you watch on the non-banking financial organizations, so probably this number will be the same in the region. And of course, if we compare with the digitalization of the lending processes for private individual customers, so here, of course, almost all the banks implemented either partial or full digital customer journey. But I'm sure that we will see more examples this year on the digitalization in SME segment. And the question actually that remains in discussion everywhere, that the technology is on the market, so it is available and it allows us to digitalize the processes, and the data is becoming actually more and more available, especially with the PSD2 launch, but we still see manual and semi-manual processes in the banks. So as the technology is not the main barrier or not a barrier at all, so let's talk on the human side of the digitalization, how actually to combine automation and relationship banking. And Svetlana, Christian, and I'm passing the word to you to share your experience with that. You're welcome to start.
Hello. Yes. Hello. So I'm continuing now. Thank you for this nice introduction and for sharing the data and your research results. And now I will continue with entering you to the story about Q-Lana background and about some facts on SME banking in general. First, to introduce myself, my name is Svetlana Žikić, and I'm the representative for Europe and for Central Asia. After me, my colleague Christian Rummer will continue with some other insight regarding Q-Lana as a platform and talk about some features and functionalities. When I say background, I mean how and why Q-Lana was developed. First, we in Q-Lana looked at some characteristics of SME banking and some true nature of SME banking. We also looked at some successful SME banks and analyzed positive examples. We relied on our experience beforehand that we had and interactions with entrepreneurs, SME entrepreneurs and clients, just in order to understand what is missing in SME lending. I just want to add that the main founders of Q-Lana were banking professionals beforehand, so they knew SME lending in details. And besides, we also looked at fintech companies which were at the market at that time, just to distinguish and to realize how they approached and how they were successful or failed. This is there were starting points, and at the end, our findings or the conclusions. The main finding is that SME banking is based on knowledge, based on experience, but moreover on relationship between relationship or banking manager and SME entrepreneurs. I mean micro or SME enterprises. This is the fact because SME entrepreneurs need a financial partner, which they find in a bank institution. They need advice, they need support. They are absolutely likely to rely on the knowledge and experience of SME or banking manager or relationship manager. On some way, they want to be supported by a bank. And we also learned that disburse of loan is just the beginning and the first step in lending process. So everything after that is the big role of relationship manager. I mean, all the monitoring, collection, and working with difficult clients. That was the first findings, and the second one also we are all aware of it, that SME banks need to automate and digitize their lending process. In general, they automate and digitize every process like any other company. This is the pressure because of reducing costs and focus on efficiency, but also there is a need to mitigate risk and to manage risk, which Q-Lana can help and assist very, very well. So after all, we could say that technology, I hope we all agree, is necessary, but on some way adjusted technology, which means that we in Q-Lana during the implementation faced some problems with rejecting technology, not understanding the platform. So Q-Lana during its implementation adjusted to the user, and our user is of course relationship or banking manager. On some way, we also cope with the data of quality of data, which is we found as a big problem of banking sector, quality of data in of core system. So the Q-Lana provides some advanced storage and structure of data that could be used by managers in the process of automation and making decisions. All in all briefly, our motto or our credo is that we combine technology with human interaction. That is why we have that credo, human side of SME banking. And this is the answer on our starting question, why Q-Lana was developed. And now I would like to invite Christian to continue with the presentation and talk about all other functionalities. But also I would like to invite you to ask questions on the chat that if we don't have time at the end, we will answer all on any other way, by mail or so that's for me. Thank you.
Thank you, Svetlana, for this introduction. My name is Christian Rumer, and I'm glad to be able to make the presentation today to you. We'd like to continue with the title of the seminar, which we said it's the human side of digital lending. While we have seen a strong focus in the discussion around future banking trends about technology, we also have to consider that the human component in lending process is a largely underestimated component, specifically in SME lending. What do we mean with that? Well, for us, there are 4 factors that are important for digital SME banking. First of all, SME banking in general is, for our perspective, relationship banking. The information a relationship manager collects in the collaboration with clients over long periods of time is invaluable. Relationship managers build proprietary knowledge in the exchange and the discussion with clients. Relationship managers are able to assess the capacity, the focus, and the ability to manage crisis through the interaction with the client. So all this learning component between client and relationship manager is extremely important for the right selection of clients in SME lending. Next to the qualitative information that we collect in the interaction with the client, there's also the quantitative information, because banks create a lot of quantitative data, for example, about performance, utilization of credit lines, drawdown, repayment patterns, who do they pay, and so on. Core banking software is primarily focused on accounting, but not necessarily on the structured collection and assessment of such performance information. So here is where we need to work with Q-Lana to make sure we have the right data collection structure in place and can also analyze the data that is collected not just over the last days, but over a longer period of time. Another important factor that we see as a success for digital lending is monitoring and early warning system. From our perspective, financial institutions spend significant time assessing credit quality of a loan before disbursement. But I can promise you, no loan has ever defaulted before disbursement. To the contrary, through an intelligent and focused monitoring, a financial institution can be able to discover critical developments of a client, critical developments of a loan early on before the client defaults. Here, it's important to see that many financial institutions consider a loan risky when it's 10, 20, 30 days in arrears. I think the riskier loan is the one that performs today but doesn't pay tomorrow. Yet our monitoring systems so far are not working in the direction of identifying those loans, because as long as the client pays, we don't really look after them. So having a good monitoring system, having a good way of interacting with clients is absolutely essential as a success factor for digital banking and SME banking. Finally, also we see the implementation, as Svetlana already mentioned, that this is the most important factor for success. Digitalization is not only about acquiring software. Digitalization requires a mindset of change by the staff to focus on key processes, produce valuable information in a structured manner, and also not to fear the application and not to fear that the digitalization will cause them to lose their jobs. So digitalization can certainly help financial institutions to enrich the quality of the lending process. We have so many initiatives which try to eliminate the human interaction in the lending process and replace human professional decision-making with rating and scoring models. We would like to not dispute the benefits of certain scoring-based decisions, but we also see the quality of the lending process can be significantly improved through the lending process. As a matter of fact, we have looked at the lending process, and we have split the lending process into 7 different steps, as you can see on the slide here right now, from the client acquisition to the application, recommendation, approval, and so on. And we've seen that digitization can really help at any stage, enriching the process to make sure that we're avoiding avoidable mistakes, and we are collecting better information, and we're making sure that every interaction that we have as a human being with a client is somehow tracked and recorded. For us, for example, this already starts with the client acquisition. In the client acquisition, we should not just sell our loans, we should work with clients on understanding their business model, making a SWOT analysis, ask specific checklists, or develop a client potential score to make sure we fully understand the needs for the client. And I'm not saying that the client shouldn't be able to apply online. That is still very much necessary. The interaction can be online, but there needs to be somebody who understands what this client is all about, because the client looks for a financial partner over a long period of time. The client doesn't necessarily worry only about the disbursements of the loan. That's the easiest part. The client is interested in the fact that there is somebody, when problems arise that are not caused by him, who helps him. And that's actually very good, and solid digitization can help. We see the similar thing with the loan application process, where we collect data. We might introduce rating and scoring here. That's perfectly fine. And we have developed in Q-Lana, for example, several scoring algorithms and several rating algorithms to support decision-making and potentially replace some decision-making when it comes to renewal and so on. But we also need to make sure that there is a human understanding of that process. Similar in the other steps, we'd like to make sure that every interaction, every meeting, every minutes of meetings are tracked well, to make sure that really the information is captured all in one place, all in one platform, so that really you have access to that information. That's another important part that we see critical in digitization platforms, for example. Very often these digitization platforms have just a one-way information flow. The loan officer, the relationship manager inputs some data, and that's it. That makes the information quality low, because the relationship manager just wants to make this application go away, fill in some minimum information, and submit that data. If you make that more interesting, if you make it knowledgeable, if you allow, for example, the client also to get information back, and the relationship manager to get information back, to, let's say, when he analyzes a car dealership, find information on the system about car dealership loans, what is interesting about car dealership loans, then the quality of work of the relationship manager with the client gets much better. This also helps your image as a financial institution vis-a-vis the client, because now you're not just seen as a loan provider, you're also seen as an information provider. You're now seen as a partner, because apparently you seem to understand, in my example, something about car dealership loans. And as such, it is really better to have the information that you are collecting digitally made available to the client, to the relationship manager again. Another component that we see is really the fact that since you are working in an ecosystem, in an environment where lots of clients interact, it is absolutely beneficial if you start connecting this client information. If you know that you have your client company and you know who owns this company, maybe the one who owns it is also a client of yours, or another company, or who are the employees of this company, making sure you build that connection. But you can even go beyond that and see that you connect transaction information, news, or client information. Who are these clients dealing with? What part is he publishing on social media? That's very key, both for private clients as well as for corporate clients, to link to see what are they posting on Facebook, what are they posting on LinkedIn, what are they talking about, so that you can see that information. But you can also connect to other external information, such as credit bureaus, rating agencies, such as sector news and others, as well as on the other side with clients and employees. So in this way, you fully understand how your borrower, how your SME connects in the overall community, and you can provide them support. So for example, if you see that one supplier has problems, you can immediately see which other client of your clients rely on the same supplier. In this way, you really build an ecosystem, and you really build your proprietary knowledge about the client base in the way that you are interacting personally, because most of these links you find out through talking to clients. The clients will not submit that information voluntarily, but if you visit the client, if you provide some information and take some information back, and then subsequently digitize that data, you will be able to have a much better interaction with the client over time. Finally, you can also see that if you start collecting transaction data, and we've made the example, we have simulated a financial institution for a 5-year period, an institution that has 800,000 clients. We have collected 57 million data points about projected cash flows. And over 5 years, we collect 1.5 billion data points about how clients are performing. That is data that is generated by your core banking software usually, but usually also not stored by them. Core banking usually looks at accounting data, but doesn't look at that information. If you have a good digitalization platform, you will start collecting this data, even if in the first year, 2 years, you don't know what to do with this data yet, because it's not sufficient for drawing conclusions. But over time, you will have a data pool of information that is really your strategic competitive advantage, if on top of that, you use the human factor to analyze and to understand the data. In the same way, for example, you need to make sure you're collecting the information in a structured manner so that you separate information from a loan application to a client, to contacts, that you differentiate between the loan application and the loan facility. You're managing your collateral separately and all these things so that you can really make sure you have the optimized structure of your data. If you do this, you have a platform that is at the core of your digitalization strategy. A good platform allows you to give a client multi-channel access to you. It can be in person, it can be online, it can be on the mobile phone, it can be on the web, it can be through other applications, but the important thing is multi-channel. It allows you also to manage the application process based on efficiency. You can see how much time is spent in which process stage and why it takes so long to process. Your risk management will be significantly better. And I'm not just talking about the regulatory risk management, I'm talking about the proactive risk management in which you can really discover problems early. Your knowledge management will just be your key benefit. And this is something that we've seen for SME banks all over the world. Traditional SME banks who have worked in the analog environment for 100 years and have worked with these clients over time, they make better decisions because they know clients better and they can connect the information better. And if you bring this on a digital platform, it's even better. The collaboration between teams, in the bank is important. The collateral management, document management, and then if you go to the fact that more and more investors are requesting to make sure that you have an ESG report or that you look at your impact, that can all be delivered through a digital platform. If you do that well, then you actually have the chance to do many interesting things with clients that you haven't even thought about yet. You could look at multi-level scoring. We don't believe that one score is important. We think we have a score of a client that is already existing, a score of a client that is new, a score of a client how he's performing over time, a score for a client that is reapplying. It's not just one score. It's a combination of information that brings together and helps you making your opinion. It's also an interesting as component to look at such a platform to allow you to approve client limits and not just about specific products. So very often we see that institutions try to optimize the application process by shortening certain steps. I think the best shortening step is if you start approving once a year a certain risk appetite for a client and then change the application process for the individual transactions by the fact that you already have a credit approval and you can shorten that approval process. Of course, you can always integrate other data sources and you can provide training, instructions, and specific reports for users. Those are all interesting benefits that you can use a digital platform for. Of course, when you talk to a vendor of a digital platform, they tell you, oh, it's all quite easy. Yeah, we just need to prepare a little bit. We do assessment, configuration, customization, we deploy and we roll out. Wonderful. And the vendor tells you within a month or two, you have your platform ready and everything is dandy and everything is nice. Again, that's only part of the story that we see here. We also see that, for example, the implementation support is absolutely essential. It will take you 1 year, even 2 years, to make sure that everybody in the institution fully benefits from the platform, from the skills the digitalization platform allows you. It's the rollout planning, the systems integration, the data quality, not just the data quality per se, but the way how data is structured in core banking, and you're trying to integrate that. That sounds easy, but is usually tremendously complicated because everybody who works with core banking makes shortcuts. Communication is important. We've seen so many times that clients are fearful, that employees are fearful about losing their job to a piece of to a computer chip. That's not the point if you do it well. If you do it well, your loan officers will have a specific function that is even more enriched and even more valuable than before. Training, again, it's not just one training. It's not just one seminar or one webinar or whatever that makes you change. It's like driving a car. You don't learn driving a car from one training. You learn driving a car from experience and repeated trainings. The same way digitalization needs to include trainings on an ongoing basis, and as well as the monitoring of data quality. When I mean that, for example, we sit down with loan officers and look what they're entering in systems, and then ask them to read it to us, because then they realize that they have been used to not focus on the way they phrase recommendations or they phrase analysis. Those parts for us are extremely important for the success of digital lending. So these are the 4 success factors that we wanted to talk about. Let me just briefly, before we round up, talk about what Q-Lana is. Q-Lana is a digitalization platform. We try to be very flexible. We try to be very configurable with our platform to deliver all these things that we've just talked about. And we've given you some screenshots already of the platform as well. We are modular, and we use a low-code technology, which allows us to really configure the platform with you on site. We do risk assessment of corporates, of individuals. We use qualitative and quantitative information. We have workflows that are flexible, whether you have auto approval, committee approvals, or anything else. We have risk monitoring. As I said, we use the 5 years of data that we're collecting to do vintage analysis, migration analysis, stress tests. We are providing you the support for tracking the information IFRS 9 if necessary. We use knowledge management to provide you with contextual intelligence, that the loan officer gets information from the system where and when he needs. If he goes to a client for an acquisition visit, he gets different information on his tablet than he gets when he does a review meeting with a client. And of course, we are connecting to core banking software and all the others through sources through APIs, as well as really providing you the partnership that you need here. For example, if we roll out with a client, we are prepared to stay with a client for a year or 2 to really work together. That's it. That's what we do. We can always give you an introduction. We can test with you together. We can plan. We can make decisions. We can help you in the decision support as well. We're working with clients. We're working with banks to help them talk to their boards to see what is necessary, what is important, because we know that the decision process for digitalization can take 6, 12, 15 to 18 months. That's so far. Thank you for your attention. If there are any questions, please let me know before we round up.
Yes, actually wanted to ask if anybody from the attendees have some questions, so we still have 1 minute for you to type them if you have one, so I don't see any at the moment. Well, maybe Christian and Svetlana, maybe I will ask you while we are waiting, if we still have a minute, if you can sum up, because like you mentioned some timing, so how long can it take to digitalize the process with the banks from your experience? So maybe also to sum up shortly some of the main barriers that you see from your side of the digitalization of lending, and actually how to maybe short recommendations, how to overcome them.
Thank you, Elena. Yes, so first of all, differentiation, deploying, we can deploy within weeks. Yeah, that's a question. So if we start and analyze the processes, replicate the processes, we can do this within weeks. Within 2 months at the latest, you have the first version of the platform to work with us and to specify the to detail that. That's relatively easy. I think the challenge here that you have, and this is where, for example, a bank, a traditional bank, and a new entrant, fintech, for example, differentiates. The banks have established processes already. The fintech company can start fresh, greenfield, new product, new processes, everything works as they define. In the bank, we have to look at not just about the manuals, but about how it's done in reality. Yeah, because everybody makes some shortcuts around the way they do the day-to-day work, and we like to make sure that digital doesn't get more complex. And here, for example, one thing that we've discovered if we work with human beings, that the first couple of months will be more effort. Yeah, it will not be time saving from day one, and that's immediately where frustration sets in, because you have to make sure that really all the data is collected, and it's much easier to grab it on a sheet of paper or to make some notes later than following a system where you have to enter data. So here, really, the success factor is communication. The success factor is slowly taking step by step, using certain parts of the process and roll out over time. And then again, we start digitization, we start using the platform within 2 months, but we are fully comfortable with a client using the platform within a year and a half.
Okay, thank you, Christian. So I see we don't have any questions. So then we are closing the webinar. Yes, as Svetlana actually wrote here, you will have the possibility to, and you're welcome to ask your questions by emails after you receive the video and presentations right after we finish now. So you're welcome to do so. And thank you for your attendance, and goodbye.
Thank you.
Thank you very much.
Bye.
Thank you very much.
Thank you to all.